Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Well, coming up, car trouble. Former Nissan ex-chairman and auto great Carlos Ghosn set to be indicted by Tokyo prosecutors. We cross live to Paris for the latest intel on the Nissan-Renault drama from the businessman and global financial expert based in both Japan and France, Starfort founder Courtis. Shrinking to greatness. Asaleo Care shares on the up this week, soaring 50% yesterday off the back of a $180 million sale of its tissues business. Asaleo CEO Takla talks the future ahead for the business. And the Week in the Review will run through the biggest corporate stories of the week with my market panel and recap the week in politics with former Senator and Chair of the Australian Financial Complaints Authority, Helen Coonan. Now, the grand old phrase, a week is a long time in politics, has high resonance in Britain, doesn't it? It's the week of debate ahead of the Parliament vote on Prime Minister Theresa May's Brexit deal, a deal that she and her bureaucrats painstakingly negotiated with the likes of Michel Barnier, Europe's chief Brexit negotiator and Anglophobe, a deal which all 27 EU members have now endorsed. And fair to say, it's a deal roundly despised in the British Parliament, Brexiteers and Remainers, true believers all. Well, this week has been mayhem. For the first time in British history, government ministers have been found in contempt of Parliament, refusing to make public legal advice on the deal. We now know that that legal advice confirms the Irish backstop will not allow the UK to leave the EU customs unions unilaterally, that it's Hotel California for Britain, and that Donald Trump is likely right, that Britain will be stopped from trading outside of Europe with the US or Australia or anywhere else. So much for free trade. What a disgrace. After that bombshell, the Prime Minister also lost 3 votes in a day in Parliament, something not achieved since the 1970s. Even the Chief Whip says Theresa May is now heading for defeat on this vote. A critical cabinet meeting overnight on yesterday, failed to secure an answer to Minister Amber Rudd's question, Prime Minister, what are you going to do? Should the parliamentary vote be delayed? Should the PM return to Brussels to get Michel Barnier to cut her some more slack? And how likely is that? Britain is frozen with fear about a hard Brexit, with scaremongering ice makers, including no less than the current governor of the Bank of England, Mark Carney. That's another disgrace. Well, for those wondering where Boris Johnson is when you need him, good question. As it happens, he popped up in Amsterdam on yesterday, at a business breakfast for chief risk officers, which was recorded and then released to the UK Telegraph. In it, the chief Brexiteer again invokes his hero Winston Churchill and that moment when, against all odds, he convinced the British cabinet to go to war against Germany, a gargantuan risk at the time. Boris Johnson has his passionate supporters, of course, including, believe it or not, Conrad Black, a former proprietor of the Telegraph and Fairfax, RIP, and still a member of the British House of Lords. Well, Lord Black on Wednesday said in an article that we should all read for American greatness, it was called "The West Needs to Rediscover the Talent for Self-Government." Now, he picks Boris Johnson as a likely successor to Theresa May. Well, romantic as that might be, there's at least half a parliament of MPs, Tories and Labour, who will do everything they can to make sure Boris Johnson does not get his finest hour. One long-time Brexiteer told me overnight that there would need to be a grassroots riot akin to those Emmanuel Macron is facing in Paris for Boris Johnson to return. The Stop Boris campaign has already started. And we come back to Conrad Black's point about leadership, or a lack thereof. If Theresa May is toppled, it's difficult to imagine a Remainer being able to negotiate a better Brexit, let alone manage a hard one. That would leave someone like former Brexit Secretary Dominic Raab, who quit Cabinet and has been pushing Mrs May to go back and get a better deal from Brussels. The choices for the ever-shrinking May camp are stark, including ceding power to Parliament to decide the UK's fate, where opportunism from Remainers and Brexiteers will reign. A referendum seems unlikely, as the question to put to the people once more will be so open to spin, a bit like our republic. And if the answer were to remain, you can bet there would be riots then. What then? Calls for 2 out of 3? Labour leader Jeremy Corbyn summed up the state of affairs in The Guardian. Instead of the sensible agreement the Prime Minister could have negotiated, he said, it is a worst of all worlds deal that works for nobody, whether they voted leave or remain. He argues he would do a better deal. Well, that's not what business in Britain believes. Even those which have been making plans to evacuate Britain are now doing so not just for a hard Brexit, but for a much worse scenario, a Corbyn government. Well, let's kick off with Australia. Now, we've seen the Royal Commission fallout all over the place, but today APRA has announced it's taking action against IOOF for failing to act in the best interests of its superannuation members. The regulator is beginning disqualification proceedings and wants to impose additional licence conditions. The action is based on issues raised by APRA since 2015 relating to IOOF's organisational structure, governance and conflicts in management frameworks. APRA Director Chair Helen Rowell says the regulator has been working with IOOF for several years. The regulator named the company and also 5 of its directors and executives, including Managing Director Chris Kelleher, Chairperson George Venados, CFO David Coulter, General Manager of Legal Risk and Compliance Company Secretary and Paul Vine, and General Counsel Gary Reardon. Well, they added APRA's efforts to resolve its concerns with IOOF have been frustrated by a disappointing level of acceptance and responsiveness to the issues raised, which is not the behaviour we expect from an APRA-regulated entity. Well, IOOF has responded to the action. It's saying it's disappointed, adding the historical matters the subject of the proceedings were disclosed to APRA a number of years ago. IOOF has already addressed or is addressing them. If successful, the disqualification proceedings will ban the named directors and executives from being or acting as a responsible person of a trustee of a superannuation entity. So quite serious stuff. More details on this story from Your Money business reporter Leo Shanahan, who joins me live at the desk. Was this expected?
I don't think the extent of it was expected,
no.
Although I mean,
all these 5 gents.
I'm not surprised that this action's been taken by APRA, who were made to look, have been made, much like ASIC, to be made a bit useless, yes. Frankly, in the last couple of years. And they were exposed to the Royal Commission almost to the same extent that these financial institutions have been. And I think there was a lot of pressure on them to act. And outside of AMP, this is the most serious action that's been taken against a financial institution, definitely the most serious by APRA. And, you know, for this to happen to Chris Kelleher, I mean, the implications are pretty huge as far as IOOF are concerned. So
just take us back to that little ding-dong that he had, I think, with Mr Hodge at the Royal Commission, where he seemed to be sort of rather disinterested, rather unconcerned.
Well, they were questioned on the relationship between several of their companies, that is the trustee company for superannuants as well as the investment company, which were basically the same responsible entity.
Right.
And obviously there's potential for conflict there, as the Royal Commission pointed out. And in fact, in the past, amounts had been paid in compensation after there was an over-distribution made from one company, was taken out of the superannuation company, paid back as in terms of compensation.
So you're the member, you need the money paid back, you're getting the money paid back by your own...
On your own fund. I mean, it's kind of
And
ludicrous.
What did Mr Kelleher have to say about this?
Well, I mean, he said he was basically unconcerned with the structure.
Yes.
He was indifferent, I believe, is the
indifferent.
term he used.
Didn't go down well, did it?
To the structure, although if APRA wanted to change it, he would attempt to change it. But the point is, there's enough of this. There's enough of the language, there's enough of the double-speak, and there's enough of the excuses from the likes of IOOF. APRA now needed to prove their own worth, and action is what is required. Now,
Leo, this has a slight knock-on, doesn't it, for ANZ?
Definitely. I mean, now this calls into question the acquisition by IOOF of OnePath, which is the superannuation business that they were buying off ANZ. Now, this was a $2 billion odd sale. It's going to get very complicated. ANZ put out a statement today saying that, of course, they'll review the significance of APRA's actions and assess various options available to us while we seek urgent information from both IOOF and APRA. Now, if there's not if these managing directors and chairmen and senior executives, I mean, legal counsel all the way up and down, aren't allowed to be part of the super business, well, you can't very well sell it to them, can you? And now they'd either have to be stood down from IOOF or the sale doesn't proceed. Either way, it's not going to be great.
Right, okay. And so ANZ has that business, it's got other business it's selling as well?
Yeah, so it's actually selling Zurich. There's the wealth management, the super and the insurance business were kind of tied up together. Now, they were selling those off in different parts. Now, they're nervous that this could interfere with a $2.7 billion Zurich sell-off as part of insurance. So they're keen to emphasise the fact that this isn't necessarily tied up, that they can unscramble the egg there with the insurance business they want to offload to Zurich as part of a $2.7 billion deal, and they're confident that will still proceed. Right, so
furious sort of statements of clarification coming out today everywhere. Coming back to what APRA may do to these 5 individuals, that's, I mean, that is pretty tough action in the context of what's happened so far.
Yeah, so APRA is not only these bans that are that they're pushing for, it's also changes to their licence conditions and the way in which that structure, that conflicted structure currently operates. That would be basically a forced separation, but including other types of licence changes. I mean, God, IOOF had 35% of its share price wiped out today, down to about $5.20, I think it was at one stage. I mean, that's really, really bad.
And let's remind everyone that it's not an insubstantial company.
No.
I mean, it's very like AMP, isn't it?
It's very much like AMP, and I find the parallels with AMP pretty interesting as far as a financial institution that is really under pressure as far as these core parts of the business that I think more than any other from the Royal Commission are exposed to regulatory change, even if it's not regulatory change. You mean their business model? That is their business model. They're vertically integrated, they're financial services, they're super, but they're not. At least banks can cut all this stuff out and they're still a bank. What do you have in these financial services companies if you've got pressure on the super funds and on the wealth management businesses? What have you got left? And AMP is very similar, and I think IOOF is, well, self-evidently in a lot of trouble.
Yeah. Leo Shanahan, thank you very much. Very interesting story today, for a Friday especially. Right, well, let's move to a company with some better news. Asaleo Care is an interesting little company in the manufacturing space. Yesterday it announced it would be offloading its consumer tissue business to Solaris Paper for $180 million. Asaleo says it will retain its consumer tissue businesses in New Zealand and the Pacific Islands, but the deal will mean it can concentrate on its core, higher margin and less capital-intensive businesses around feminine hygiene. Over half of future revenue will now be generated from the business-to-business channel. It has actually been a pretty bumpy year for Asaleo Care, though, the higher cost for pulp and energy leading to a huge downward revision to full-year earnings guidance back in July. There's a big bump there. Shares were slammed, with the company now around half the value that it once was. But the sale announced yesterday has seen the shares bounce back a lot. So what will this $180 million cash injection mean for the future of the company? I sat down with Asaleo Care CEO Sid Takla a little earlier.
Yesterday we announced the sale of our Australian consumer tissue business. And for your viewers who don't know who Asaleo Care is, we're the company behind the brands such as Sorbent, Handy and Deco in regards to the Australian consumer tissue business. And our personal care business includes brands such as Libra, Tenor, and our professional hygiene business is our Talk brand.
So very interesting that you have really decided to sell the sort of tissue side of the business here in Australia anyway. Now, what has driven that? Is it just a matter of the margins, or are rising costs on, I'm just thinking, energy and then pulp costs as well driving that?
Ticky, we commenced a detailed strategic review about 6 months ago. And we set ourselves some clear objectives through that, and really the main objective was around setting up a business for long-term sustainable growth. And we set some criteria around that, and one was around establishing a strong balance sheet, it was around improving the mix of our portfolio, and the third one was around having a less capital-intensive business. And when we overlaid those criteria across the several initiatives that we looked at, the sale of the Australian consumer tissue business was the one that was most obvious, because it is very capital intensive. It's the lower margin of all the categories that we deal in. Yep. And having a business where we work we are debt constrained. We're at the upper end of our leverage ratio. We wanted to bring that down. And as you said, Ticky, with the higher pulp and energy costs, it really constrained the business. We weren't able to invest in our core categories such as Libra and Tenor and the Torque brand. And so we really wanted to open up the business for growth going forward.
Yeah, well, I mean, the market certainly supports that, and particularly the paying down of debt. So going forward, what are these brands that you've got now, particularly in things like feminine hygiene, how are they going to work? What's your competition?
So our focus is really now to invest in those brands. As I said, with paying down the debt, the big part of the tissue business also, Ticky, was that it was very capital intensive from a capex and a working capital perspective. So this now allows us to really invest in innovation, technology. We also mentioned as part of the announcement our extension to our licensing agreement with Essity. There's a 5-year extension that takes us out to 2027 now. And a lot of our technology and innovation comes through our global partner Essity. So our focus now is to really...
Yeah, that contract was something that was certainly weighing on the markets as to what terms that you might reach with Essen. Are you happy with the terms that you've reached?
We're still in the process of finalising those terms and conditions. We're really engaged with Essity. Most of the business that remains are essentially the Essity brand, so it's in their interest that they engage with us. I've got a long-standing, and the business has a long-standing relationship with Essity, being the previous owner of this business. We get full visibility of the innovation and pipeline that they're working on. So it's in their interest as well as ours to make this partnership work.
Yeah, okay. And so once you've sold the business, as transactions come through, obviously that's going to change your earnings guidance. Have you got any guidance that you're giving the market at the moment?
We're not providing any guidance at the moment. The direction we are providing is that the transaction is EBITDA accretive, which obviously implies the consumer tissue business was loss-making. And the other point that I made earlier, the real key driver behind this, Ticky, is the cash generation. By freeing up that excess capital that's been tied up in the tissue business, it allows us now to invest in the Libra, Tenor and Torque brands in particular. Yeah.
Does the government changes to the GST make a big difference, do you think, for the consumer?
Not from us personally, because obviously we don't bank that GST revenue, but definitely for the consumer it will, and we were a big supporter of that, and we lobbied the government. We actually led that process.
But do you think it actually makes a difference? Do you think it makes a difference to demand? Because obviously these are products of necessity as well, aren't they?
Yeah, I think you're right, but I think the principle as to why GST shouldn't be applied on them, I think was correct in terms of that should be removed. It wasn't appropriate that GST was applied. And as I said, we're a big supporter of having that removed. Is it a major impact on demand? No, I don't think it will be, but it was important from a principal perspective, and particularly being the only feminine care manufacturer in Australia, we felt it was important that we supported the push for that GST removal. Right,
so going forward, I mean, you obviously fell out of the ASX 200. You're now going to be a smaller company anyway, having sold this other business. What's the plan? What's the vision to get back in the ASX 200?
Ticky, the immediate priority is to make sure we complete this transaction. There's also a transition process that we need to go through. We want that to be as smooth as possible. As I touched on earlier, the ability to pay down debt now puts us at the lower end of our target ratio of between 1.5 and 2.5 times EBITDA, so we'll be below that, just below that 1.5. Yep. So we'll have plenty of headroom going forward to invest in those core brands of Libra, Tenor and Torque in particular. And then what comes sort of beyond that, we will always be looking for opportunities to grow the business. Yep. But we're very focused at the moment, just getting this core business right. And then we'll see where we go after that. Yeah, because one of the criticisms, I guess, in the past was that actually your spending on things like marketing had been coming down. So presumably this is now going to change. What about dividends for investors, finally? So that's ultimately a decision for the board when dividends will be paid. It's something that we will announce as part of our full-year result in February next year, and we'll provide guidance to the market accordingly. All right. Well, Sid Takla, as I say, I think it's a decision that very much welcomed by the market. Thank you very much for sharing your news. Great. Thanks for your time, Ticky.
After the break, we'll get across the big market moves this week with my panellists, Michael McCarthy from CMC Markets, Martin Lakos from Macquarie Wealth Management.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, a better day today for the local bourse with the ASX 200 closing up just shy of 0.5%. We had a modest lift in the index over the week with the market recovering from a slump on Wednesday. This off the back of a sell-off on Wall Street amid lingering concerns about the trade war and the bond market signalling a potential recession. On that and more company news this week, let's bring in our Friday market panel, Michael McCarthy from CMC Markets and Martin Lakos from Macquarie Wealth Management. Martin, let me start with you. I was very surprised. I thought we were headed for a bit of a wimpy day today, but no.
Yeah, we recovered, but I mean, what a very huge week, Ticky. But also last night was extraordinary because if anybody was up early like I was at 6 a.m. looking at markets, US markets were looking terrible. 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 And the last hour saw a broad-based rally, particularly in the tech sector, where we had the S&P...
The sexy tech sector.
The sexy tech, exactly. The S&P 500 was down 79 points at its worst and closed down 4. So a very significant reversal day. And we had, I think, our futures were down heavily, and we turned up into a positive day. Obviously, we've had a couple of stocks in the sectors that haven't performed. Materials still a little bit weaker.
But what do we think this means for Christmas?
Well, Santa's not coming to the markets, I don't think.
Well, we've got a triple bottom in place. The market has once again respected the 56.40 support 3 times down the last 6 weeks. We've tested that level and have not been able to close below it, and that's a sign of underlying strength. So I wouldn't discount Santa arriving again this year.
It might be late this year then.
Well, it could, yes, it could be between Christmas and New Year.
Now, is he delivering coal or is he delivering presents?
Yeah, exactly.
Have you been good, Martin? Have you been good?
I'm trying, I always try.
All right, well, let's go to a company where apparently the chiefs have not been so good. IOOF. Michael.
Oh, what an extraordinary scene today, Ticky. And I must say, whenever a management team push back hard against the regulator's findings, it's generally bad news. And the market certainly took it that way today. Stock down 35%, and that's no surprise.
It's a big company.
It's a huge company, and the officers charged are amongst them the chairman of the board and the managing director. Ticky, this is terrible. It looks terrible. And APRA is seeking to have them disqualified as the managers of the superannuation fund, and that has huge implications, not just for those super funds, but for IOOF itself.
Well, what happens if they get, you know, basically struck off from managing?
Well, I'd say that there will be a wholesale change at the top of IOOF. I can't see how that could be avoided if APRA succeeds with its application to have them disqualified.
That sort of disruption would be extraordinary, wouldn't it?
It certainly is, and it's very disappointing to hear the company come out after APRA has brought this disqualification motion, to hear them come out and say, we can't understand it, we think it's misconceived. I mean, seriously, this company has been working with APRA since 2015 when these came into the public knowledge. And yet somehow they still haven't managed to implement the process changes that they've been discussing with APRA for 3 years. I think APRA's could have a very strong case here.
Yeah, more broadly, Martin, I mean, this is, you know, quite an interesting sign how APRA's prepared to go.
Absolutely, and it's probably a sign for investors going forward that post the Royal Commission and the final report, all the remediation components, so the backwash is still going to be with us over the next 6 to 12 months going to next year. So not that I'm suggesting there's going to be big share price moves like we've seen in IOOF, but clearly those in the spotlight are going to have to go through a process of new strategies, investment in IT, changes in culture, all those key areas.
Well, of course, we've got the big three of the 4 banks, not CBA, the other 3, their AGMs in the next 10 days, haven't we? Presumably they're going to face quite a lot of heckling from the floor,
You'd think there'll be some questions without a doubt, but it'll also be interesting to analyse results to see what they're saying about the economy. In other words, you know, they're a great proxy to see how the economy's going, and the last GDP read was a disappointment. Is there a trend there, or does that appear to be a one-off? It'd be very interesting to see what they have to say about the mortgage market and impairments.
Housing.
Impairments have been very low, less than 1% of total lending. So again, we should get a bit of a read and some colour on how things are going. So it's going to be very important to be going through that information.
Michael, those AGMs, how do you see them?
Well, I think the market's reasonably cautiously optimistic about them, judging by the share price performance today. We saw financials smashed in Europe, and most of the European exchanges finished down more than 3%. And even with that US recovery, financials were the worst sector. And yet locally, and here in the region, Hong Kong in particular, the banks actually rose today. So we've been very defensively positioned. I suspect a lot of the management teams will look to keep things fairly subdued next week. They're in the spotlight, they don't want to be, and I think that they're going to avoid controversy. So we'll hear a lot of pretty straightforward assessments and some pretty cautious statements.
And slightly different now, because whereas we had two bank chairs being grilled at the Royal Commission where, you know, they were not on home territory, at least these chairs are now going to stand up. They will be able to control the situation far more than you would be if you were up against Rowena Raw, for example.
Well, let's say it'll be a much friendlier crowd.
Yeah. OK, now look, the other sector, which is slightly on the nose for the same sorts of reasons, the energy sector. Now, interestingly, Origin came out today at its Investor Day with quite a swipe at the government, saying that, you know, how can anyone invest around here, basically, if we've got this sort of big stick hanging over us?
Well, you know, to be frank, Calabria, I think that's reasonable. The reality is these companies have been trying very hard in an environment where the goalposts keep shifting, and even worse, they've been made a political football at a time when really it's not of their making. The discussion around the energy groups and around electricity in particular has been very populist, very high level and very simplified. And the reality is energy generation and the whole gas issue is a much more complex issue. And regulatory authorities and the government have not been any help in explaining that to the public. There's a good story here that needs to be told, and I think the pushback, in a backhanded way, is Origin looking for some partnership from the other people involved in the energy industry.
And we can't ignore, of course, the oil price. Obviously, we've seen it come down. We've got an OPEC meeting coming up.
Yeah, we do.
We really sort of now think that oil is going to be locked into a bit of a trading range. There's quite a number of US oil producers, sub $50 are not profitable producers. That's going to start knocking some production out. It looks like Saudi and Russia may come to an agreement in cutting 1 million barrels of production per day. And you've got more impacts from Venezuela's production, declining production, and the Iran sanctions. So we would expect to see the oil price will recover somewhat to the mid-60s, maybe even as much as 70. But at that point in time, once again, the US oil shale companies come back in. So it looks like we're going to be locked in that range for a while. So
the other thing I want to just briefly ask you both about is Canada's, arresting of Huawei's CFO, Canadian CFO there, and extraditing back to the US now.
Is it just me, or was the timing uncanny?
The timing was very interesting, wasn't it?
Yeah.
But are markets worried about this sort of thing? I mean, does it
they were clearly reacted last night until they probably, gauged that, hold on a minute, this may just be around tactics in regards to trade negotiations. You just don't know whether, in fact, there's a Machiavellian side to this as well. But we don't know what the charges are. They're not being made public just yet. So we'll have to wait and see what that is. I think you had an interesting point before.
Well, we're going to have two narratives around this. From a Chinese point of view, this is the equivalent, because it's not just the CFO, it's the founder's daughter.
Yes,
so
exactly.
this would be like China arresting Steve Jobs' son, right? So in China, it's seen as hostage taking. There's no two ways about this. They are deeply offended by this move. And of course, in the US, they'll argue, well, the judiciary is independent from the government, and this had nothing to do with us. It's about the evidence the FBI found, and this is when it's come to light. That's going to be a hard sell in my view, and there's little doubt in my mind that this move is going to escalate the trade disputes and make resolution more difficult, and that's the way I think the markets will take it.
Do you think there's any weight to the theory that Trump is using this actually as a negotiating tool to say, look what we can do in regards to IT and IP around the internet? But
well, I think
keep talking to us about negotiating on trade, and
I think it might be less on trade and more on Five Eyes, the security stuff. And trying to get Canada, to knock out Huawei, because other eyes don't want Huawei. So yeah, it'd be interesting. Anyway, look, right, we're out of time. Martin Lagos, Michael McCarthy, thank you so much for wrapping it all up for us. Thanks a lot.
Thanks, Ticky.
Okay, after the break, we'll get some insight into the developing Nissan chairman scandal. Ken Courtis from Starfort Investments will join me live from Paris next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, US lawmakers have described the Saudi Crown Prince as, quote, out of control and say he deserves to be punished. Prominent Republican and Democrat senators have agreed to work together on measures against Saudi Arabia in response to the killing of Washington Post columnist Jamal Khashoggi.
With anger boiling over on Capitol Hill.
Don't chop somebody up in a consulate. That's not too much to ask.
Momentum is growing to go around the White House and take matters into their own hands.
Us denouncing the unbelievable behavior of a crown prince who is out of control is appropriate.
With lawmakers moving to do what President Trump hasn't, punish Saudi Arabia for the brutal murder of Washington Post columnist Jamal Khashoggi.
There is common ground around stopping sales of arms to Saudi Arabia and limiting support for the Saudi war in Yemen until Mr. Khashoggi's death is reconciled and they reform the way they do business.
Huddling on Capitol Hill today, top senators, including many of the president's own Republican allies, are readying plans for a response with teeth. That would withdraw the U.S. involvement in the war in Yemen, suspend arms sales with the Saudi kingdom, and rebuke the Crown Prince, Mohammed bin Salman.
We need to send a message in the wake of the Khashoggi revelations that the United States does not condone, sanction, and cannot turn our face away from this sort of violence.
That message would serve as a sharp rebuke of the Trump administration's response, as Secretary of State Mike Pompeo and Defense Secretary James Mattis insist there is no smoking gun, and the president still refusing to denounce the murder.
They have nothing definitive, and the fact is, maybe he did, maybe he didn't.
That stance fueling the anger of top Republicans on Capitol Hill. Today, the Republican chairman of the Senate Foreign Relations Committee.
To use that as the reason that we're not going to say anything about this is just, it's un-American.
Meantime, the Saudi ambassador, the Crown Prince's brother, is now back in Washington for just the second time since Khashoggi's murder. And as he resumes his duties, there are new calls from Senator Dick Durbin for him to be formally expelled.
This was an orchestrated decision by some 15 members of the Saudi forces to go into Istanbul to lure Khashoggi into the consulate to kill him. And MBS, the Crown Prince, who now leads Saudi Arabia, must have been part of this.
The Yemen government and Houthi rebels are holding peace talks in a bid to end a devastating civil war which has killed thousands and left many more at risk of starvation. Both sides of the conflict arrived in Stockholm, Sweden to start negotiations with the United Nations. The UN Special Envoy to Yemen says getting the two parties to sit down is an achievement, but it's by no means enough.
It is an achievement because it's difficult to get parties who are warring in a very, very hot war in Yemen to sit down opposite each other, as we have just seen them do. It's not easy in any conflict. Yemen is no different. They're here. But we have ambitions, of course, beyond that. We have ambitions in three different ways. First of all, we have ambitions to discuss with them the outlines of what might constitute an eventual settlement.
Regardless, it's the most significant breakthrough in 2 years. The last attempt in 2016 failed when the Houthis failed to attend. Well, back here, Parliament has officially wrapped up for 2018, but not before a messy sitting week for the Morrison government. Bipartisanship broke down on religious protections and major parties traded blows over border protection and encryption. Malcolm Turnbull, meanwhile, made his presence known, provided the Prime Minister with some free advice. This is the week in politics.
The two leaders set aside their differences to deliver goods to the salvos.
Have a very, very Merry Christmas.
But the goodwill didn't last long.
Bill Shorten is a clear and present threat to Australia's safety.
There was much heated rhetoric over the encryption laws before Labor eventually struck a deal.
We will pass the encryption laws, unsatisfactory as they are, right now.
Bipartisanship broke down over legislation to protect gay students.
I'm prepared to have this dealt with as a conscience issue in my party.
No one with a conscience supports discrimination.
Labor teamed up with the crossbench in an attempt to change the government's direction on asylum seeker policy. The opposition had the numbers, but the government was able to avoid defeat on the floor of the House.
and it's just showing Labor's true colours on border protection. They never believed it.
The political ghost of Malcolm Turnbull re-emerged, intervening in the pre-selection of Liberal MP Craig Kelly.
It's important that the local members have the opportunity to have their say.
That call fell on deaf ears, with party bosses saving Kelly just hours later. Mr Turnbull also urged his successor to call an early election and offered some policy advice.
Revive the National Energy Guarantee.
The government won't be taking his advice, instead focusing on their proposed big stick powers,
which will hold big energy companies to account.
The Prime Minister wanted to draw a line under the Canberra coup culture, pushing through changes to the party's leadership rules.
An elected Liberal Party leader who goes to the election, wins that election and becomes Prime Minister, they will remain Prime Minister for that full parliamentary term.
He secured the backing of previous PMs.
I strongly support those changes.
It's a very sensible move.
Parliament may have adjourned for 2018, but don't expect politics to quiet down. Labor will hold its national conference in just over a week. The government will reveal its mid-year budget outlook, and it's also flagging a decision on the Israeli embassy move. Trudy McIntosh, Sky News, Canberra.
Well, for more on the week in politics, former Senator and Chair of the Australian Financial Complaints Authority these days, Helen Coonan joins me live from our CBD studio in Sydney. Helen, thanks for joining us there. Look, you've good afternoon. You've been through these battles. You've been through them in Canberra. How do you see the government placed? It's an awfully messy situation.
Well, look, I think that what the events of the last week have shown, and particularly yesterday, are the perils of in effect a minority government, and that means that you're trying to stay alive. It's like the old Bee Gees song, "Staying alive is the game." Yes. And it can be absolutely deadly if you lose concentration or you don't call the tactics right. So it's an enormous task to just simply stay on your feet when you are a minority government, Ticky, and I think we saw that yesterday with eventually I think the government won the tactics of the day in ensuring that the National Encryption Bill went through. That was, I think, a back down by Labor and very necessary for the safety of us all, so we're told by the security authorities. And secondly, to postpone the vote till next year, or an examination next year on the floor of the Parliament of the migration changes, the so-called medical evacuation provisions that the government said simply cracked open the whole of border security. So it left open, I think, a possibility, just a possibility, a chink in the armour, if you like, of Labor, who've been so disciplined. They let this chink in to allow now Scott Morrison to fight very much on his own ground and talk about Labor not being fair dinkum on safety of our borders.
Yeah, well, he's sort of got the last word almost as they go into recess now. But equally, that's tactically, there's I don't know how many, there's incredibly few days between now and the budget that Parliament will actually sit. Do you think the public know about this, will be happy about this? I mean, is the government actually governing?
Well, I think that unfortunately the government does get blamed for what looks like dysfunction. Certainly when Parliament's sitting, that's really when politics is paraded in front of everyone's eyes. I think the government would be pleased that there's not too many set days that they have to go through this, while at the same time really needing to focus on their core argument of a sound economy, a budget in surplus, the sort of good messages that are absolutely critical to the government having any opportunity of turning around a fairly bleak prognosis for the next election. I think that has to be recognised. But by the same token, I think the public at the moment are so disillusioned with politics of every hue. I think that's why there's been this move perhaps to be attracted to independents, getting elected in safe, what are otherwise safe seats. There's an expectation that it's a pox on both their houses, and an expectation that things that matter to people that they may be able to identify with in an independent might have more prospect of making them less grumpy than they are at the moment.
Yes. Well, if you look at the two sides, though, I mean, inevitably one side or other will come into power next year. How do you think it's going to shape up? Do you think the government have a chance of getting back in, a real chance?
Well, I do think you must say in politics, you can't ever say never ever, because sometimes the most amazing things happen. But unless there's some major opportunity to reset the public thinking, I think they've made up their mind at the moment that they are not favouring what this government is doing, and whether they expect that the Labor government will really be any better, I think is a very moot point. But as the old saying goes, governments lose elections, and I think that that's the kind of territory we're in, unless there can be a scare campaign on a border protection election, that Labor's soft, that they're going to side with the independents and the Greens to bring a whole lot of people to Australia, open up that whole argument, whether that has traction, and it could in places like Queensland. That, plus also good news on the economy, I think are the two best points, save and above some amazing intervention from something like a Tampa.
It is. Well, I was going to say, there are no boats at the moment coming, and so that kind of argument really works better when there is a clear and present danger, I suppose. But when you look at the argument about the running, the management of the economy, it is quite interesting. There are businesses now who are turning their heads very much to Chris Bowen and listening to see what he has to say, even though a lot of these popular policies that Labor are bringing out they're long-term policies, they're not particularly popular. But I suppose Labor is arguing that at least we have long-term policies. It's not just, you know, scraping barnacles and looking at focus groups. Is that something that the electorate will warm to, do you think?
Well, I think that when the electorate starts to concentrate on what it actually means for them, what it means for their hip pocket, you get a real divide between people who try to make some provision for themselves. So some elderly retirees, for example, who are going to be hit with imputation changes, the increased taxes, something like 200 billion might eventually dawn on people that they could be on the receiving end of that. But I have to say, and I do think it's a fair comment, that a great deal of perhaps Labor core supporters are people who pay no net tax and who are very invested in making sure that the distributions of a good economy come their way. So I think that it ends up being a very even contest, and you can't just run on the economy alone. I think it's got to grab the imagination of people, so that if you can really show that the economy is booby-trapped in a way that's going to impact right down the line, impact on jobs, impact on futures and people's ability to get on with their lives, I think that's when people start to question whether or not the Labor settings that have been promised are the right ones going forward.
Right, and if a shortened government does emerge victorious next year, you've got also a massive shift, of course, in the control of super and who has more under management. We've got industry super very much entering halcyon days now. Do you see a big shift in union power and influence as well, as, say, the Financial Review led with yesterday?
Yes, well, I do think that that's a real worry, that you know, there's going to be a fundamental and quite dynamic shift in favour of the unions. We all know that the unions do support the Labor government, what might be the Labor government if they win next year, and I think that is going to see industry funds impacted. I think that it's going to be a very significant move to the power shifting of those enormous superannuation funds, the mandated superannuation funds, the rivers of gold, and I think that that's certainly a real concern. I mean, it's now in billions and billions of trillions now in super. When I was in charge of super, I remember it was 750 billion, and we thought that was a lot. But of course, it's just growing. And I think what it is going to see, however, is perhaps some of the mandates for investment being changed. I mean, super funds have got to invest in something, and the possibility could be that some of this could be diverted into some fairly imaginative and longer term investment to align with the strategy in super.
All right, Helen Coonan, it's so fascinating to get your views. Thank you very much for joining us there.
Thank you, Ticky.
After the break, we'll be talking to Ken Courtis live from Paris.
Now, back to Ticky.
Welcome back. Well, today we've seen fresh reports on the Nissan scandal. Tokyo prosecutors have moved to indict Nissan's former chairman, Carlos Ghosn, and another executive as early as Monday over alleged financial misconduct, well, which is exactly the time that their period of detention runs out. Well, let's get the backstory and the analysis from somebody who's been following this case so carefully. Ken Courtis is chairman of Starfort Holdings. He normally lives in Japan, but he's there in Paris where he lives as well. Ken, great to see you there. What is the latest on this, do you think? What is going to happen to Carlos Ghosn now?
Well, apparently we only know what's being leaked from Nissan and from the prosecutor, Ticky. So on the basis of those leaks, and of course no input from Ghosn and his lawyers, it seems he's going to be arraigned next week on some charges. It's difficult to believe, Ticky, that they've gone through this enormous kabuki, as it were. You remember television cameras on the tarmac when his airplane arrived, ransacking his apartment and so on by the 14 police officers. That they've done all of this because for some arcane accounting rule that's quite debatable, because apparently the Japanese Ministry of Finance say there's no tax issues. He's declared everything he had to declare. And this obviously went through several levels of vetting within Nissan and outside auditors and outside lawyers. So there has to be more to this than is currently meeting the eye, that he be treated in this way that no other Japanese CEO, I'm talking about no other Japanese national CEO, even in cases of enormous fraud and people being killed by corporate irresponsibility, has ever been treated in this way. I think the bigger issue, though, beyond Ghosn, because in a sense, whether it's fair or unfair, he's probably finished now as a major corporate figure. The real issue is what happens to this arrangement between not just Nissan and Renault, but between the 8 or 9 companies that make up this broader alliance. And how does that move ahead in a global automotive market about to enter revolutionary changes of car sharing, of electrification, of autonomous driving, of so I think they're more fundamentally the issues that people are grappling with in Paris and in Tokyo at the moment.
So Ken, this is really interesting because it goes back to the creation of the Nissan-Renault alliance. That of course Carlos Ghosn was there at the start, and as I understand it, it's Nissan was near bankruptcy. Renault then took a 43% stake to help them out, and it's been Ghosn's drive that has changed all this. It's something the French really don't appreciate.
It is strange. In France, they're focused really on France. But Ghosn essentially took a mid-level European car company, and through these various investments in Dongfeng in China, and Dacia in Romania, and Autovaz in Russia, and Samsung in Korea, Nissan, Mitsubishi, Siam Motors in Thailand, and he's transformed it into the world's largest producers of automobile, and has been the leader in the electrification. And it's also been one of the most profitable companies in the automotive sector. So that is an enormous achievement. Unfortunately, some people within Nissan have had other ideas how things should happen, and then there this case that's brought up, so we don't know where it's going from here.
So let me put the conspiracy theory to you. The theory that I've heard going around places, which is that the Japanese now want to unwind this alliance or certainly regain control. I think it was Emmanuel Macron, when he was finance minister, that actually allowed this alliance to go through, with actually the French not having the voting power in Nissan, notwithstanding their shareholding. Do you think of the view that this has been really trumped up to allow the Japanese to regain control of Nissan and the alliance?
Nikki, you don't need to be a conspiracy theorist to think that. I mean, the leadership that's running Nissan now has been very open about this, that they want to change the alliance structure, that they want more control. They want an equal weight to Renault in this alliance. That's pretty clear. You put your finger on something that is extremely important. In 2014-15, Macron was then Minister of the Economy and Finance, and he got into a fight with Ghosn. They increased the French stake in Renault, which enormously upset the Japanese. There was a big fight. To reestablish peace, Macron accepted that Renault would never again vote its shares against a decision of the board in a General Assembly of Shareholders, and Renault effectively, although they only have 44%, they have effectively a majority. And secondly, that Renault would never increase its shareholder stake in Nissan. So that today, now that they no longer have control of the board can make decisions that are completely against the interests of Renault, and Renault can't do anything about it. So I think they finally have realized in Paris that they put handcuffs on themselves, and they don't know how to get out of them, slip them at the moment. I think they're really, really in a corner.
So briefly, what is the future of Carlos Ghosn? Because his CEO, Mr. Sayakawa, the relationship wasn't good there either. Would this be some sort of an internal ruse as well? Because clearly Mr. Ghosn denies that he's done anything wrong.
Yeah, internally, Ghosn gave up management of Nissan 20 months ago to work on the next phase of the alliance, which was to transform this, let's call it, confederation of 8 or 9 companies into a federation that would have one share, and they could then increase the value of the company and use that share to eventually invest in other companies. I think in the last year and a half, Ghosn has become increasingly unhappy with how the company's being run. And he's been quite vociferous, saying if you don't change how you're running the company, you're going back to how it was run when you ran it into bankruptcy. You're going to start having really big losses. And you probably just saw the results that Nissan's announced for the third quarter in the US and China. The profit levels have dropped all the way back to crisis 1909 levels. They've stuffed their distribution network with product, and they're giving enormous discounts now to move the cars, and they aren't making any money. So there is also speculation in Tokyo, inside Nissan, that at the next executive board meeting, Ghosn was going to ask for the resignation of the current CEO. So I think you have the two issues here internally. Yes. One is the attempt to get more control, and the second one of this race to see who's going to stay CEO of the company or not.
As you say, far less a conspiracy theory and a lot to play out here. Ken Courtis, we're out of time, but I thank you so much for getting up and talking to us from Paris. It's been fascinating. Thanks.
A pleasure. Thank you.
And that is all we have time for tonight. Thanks for your company.